Good evening, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, July 22nd, 2025. At the time I'm recording this today, it is 8 o'clock p.m. on the West Coast. So for those of you out on the East Coast, it is very late. You're likely not going to see this recording until tomorrow morning, but I believe you'll see it well ahead of the time the market opens. And that is important, especially today, because I'm going to talk just a tiny bit about some things going on with the economy and the news that's driving the economy. But I'm mostly going to spend time focusing on what our plan is with some specific trades that we are involved in. So let's just start with a little bit of commentary on what happened today in the market, and then maybe a little bit of a preview of what looks like it's going to happen tomorrow. So Dow Jones Industrial Average had a good day, a good solid day, up almost 0.5%. The S&P 500 just eked into positive territory. It was down for a good portion of the day, back and forth a little bit, and then just eked in positive territory before the day ended. The Nasdaq finished down about the same percentage that the Dow finished up, but it was almost. It was more than double this much down at one point this morning, and so it managed to come back a long way. But the Nasdaq did have a little bit of a rough day. Not anything earth shattering, but a little bit of a rough day. Um, at the end of the day today, after the market closed, there was an announcement from the White House that there's been a major trade. It's the big headline right here: major trade deal with Japan that are going to set tariffs at 15%. That's way better than the 25, 35, 40%, whatever it was. But it's big trick. Of course, Trump loves to use the word massive, huge, greatest ever, best ever. But it is a trade deal that's getting done, and I expect we're going to hear a lot more of this over the next couple of weeks before that August 1st deadline. That news after the market closed today has two things happening. Number one, futures for tomorrow are already to the upside, very nicely on the Dow and the S&P, a little bit on the Nasdaq. The Nasdaq is kind of hesitant, I think, to have much aftermarket movement because tomorrow, when the markets close, you're going to get earnings reports from Alphabet, parent company of Google, and from Tesla. And they're going to set the tone for what the Nasdaq does on Thursday and Friday, whether you see big up days or big down days on the Nasdaq. And if one of those companies comes in with really stellar earnings and the other one with so-so earnings, it might just be a wash, and it might be other things that will drive the Nasdaq on those last two trading days of the week. So we're kind of in a wait and see mode, and I think that's why the Nasdaq futures have not moved up quite as much as the Dow and the S&P futures. All right, I'm going to shift away from that. That's all the commentary I have on what happened in the market today and what I think might happen tomorrow. Let's talk about a couple of trades we're in. Let's start with the trade for our triple play members on Texas Instrument. They reported earnings today after the bell closed. You can see that they've been in a flat to slightly bearish pattern over the last week or so. But after their report today, investors were, I have not read the details of the report, but investors were disappointed, and they are trading down over $25 after market, which is almost 12%. That is a really, really big one-day drop. Always keep in mind that what happens in after hours trading is certainly an indicator of what's going to happen the next morning when the market opens, but never a guarantee. We don't, for the trade that we have open, we don't need Texas Instrument to move down nearly that low. If they did, I think our trade would close out with its full target profit almost immediately. But a move that much would, I think you'll see something a little more tame, just ever so slightly more tame when the market's open. But regardless, I think this is going to be a really easy trade to exit first thing in the morning. Let me give you a quick hint on the best way to exit this trade. And I traded some messages with some people on Discord regarding this earlier this evening. So if you were paying attention to Discord, this is a little bit of a repeat of what I put on there. Never forget when you're trading options that each one of these contracts, in order for it to fill, to open or close, there has to be an equal number of contracts on the opposite side. If I have a short put and the way to close that short put is to buy to close it, there has to be someone selling the same strike price, same expiration date. And it doesn't have to be one individual that has the exact same number of contracts, but there has to exist somewhere out there. There has to exist the same number of contracts trying to fill on the opposite side of my contracts within the same parameters of a limit order. So it's not as simple as me wanting to buy to close this option and knowing that I can do it at exactly the price I want with the limit order. I could put in that order, and it might be a little bit of time until the broker finds a matching opposite order that would sync up with my order and fill it. Now, that's just for one leg of the option. I'm just talking about our short puts. Imagine how much more challenging that could be, even with computer algorithms, even with AI, even with the other stuff that we have at our fingertips. Imagine when you have four legs of a trade and a broker is trying to match up 8 contracts of the short put with 8 contracts of the long put with 8 contracts of the long call with 8 contracts of the short call, and all of this has to be done within the parameters of the limit order that you set. Even with complex computer algorithms, even with computers doing all of the work, and even with artificial intelligence, it's not always a simple instantaneous process for a broker to match all of that up, especially when the market is open and the prices are in constant flux. The price of each one of these options can be moving every second. It can be moving, every split second. It can move a little bit, and so it's kind of a complex thing to match all of that up, even with the advanced technology that we have. So one of the ways to make it a little bit easier is take one side of the trade. So we have basically, whoops, my lines were really horrible there. We have a put side of the trade that involves 2 option legs, and we have a call side of the trade that involves 2 option legs. Tomorrow morning, when the market opens, and assuming Texas Instrument is just going way, way down right at the opening bell, these 2 options are going to be deep in the money, and the difference between the strike prices is $2.50. It's not going to take long at all for the actual price of the options to be approximately $2.50 difference. Now, we want to get out of this trade. We set a target exit order of $4.42, or excuse me, I'm sorry, $2.42. So the odds are that the value of just this side of the trade at the open of the market will almost instantly go to $2.42 or more. But if we're trying to close all 4 legs in one order, we're just handicapping our broker to try and match all of that up. If instead we set a limit order just on the put side of this alone, we set a limit order for 242, our chances go way up that order gets filled right at the open of the market. I mean, literally, if Texas Instrument does open as far to the downside as what it looks like they're going to, this thing will fill in a split second if we're only trying to get out of the put side of the trade. And if we can get our full target exit on just the put side of the trade, then it doesn't matter that the call side of the trade will drop in value to almost nothing. Both of these options on the call side, right at the open of the market tomorrow, are probably going to go down in value, and you'll probably see the long call worth 3 cents and the short call worth 2 cents, almost within a split second of the market opening. There might be a little bit more value than that. It could be 5 cents and 3 cents, or 6 cents and 2 cents, or something like that. But chances are the combined value of the call side of this within the opening seconds of the market is going to only be worth 2 or 3 or 4 cents maximum. If you get your full target profit in your trade just closing out the call side of the trade, or excuse me, just closing out the put side of the trade, then it doesn't matter if the call side of the trade goes to zero in value. You can literally just let it go until the end of the week and allow both options to expire worthless. And that's not a bad route to take. Now, in some instances, you might be able to take your short call, roll it straight down to a strike price lower than your long call, turning it into a bear call spread. You're basically just adjusting it from a bull call spread to a bear call spread. And if closing both of these options was only going to get you, say, 2 cents a share, maybe rolling this option down would net you, let's say, hypothetically, 5 cents a share. That might be worth doing, because then you get your $2.42 for the put side of the trade, plus another 5 cents for the call side of the trade, and and then you still let the call side expire worthless at the end of the week. It's just you're letting it do so 5 cents per share better than what it's sitting at right now. So it's just a little trick. It's just a little way to play with this order and increase your chances of exiting it before the end of the week. Because the last thing you want to happen, the reason you want to avoid staying in it right until the end of the week is, on more than one occasion, I've seen a stock have good or bad earnings trend way down or way up on the day following earnings, only to reverse the next couple of days and come back up to a strike price that's in between your two long options. And that's the worst thing that you can have happen. And that doesn't happen real often. When you see something moving down as much as Texas Instrument is moving down right now in aftermarket trading, chances are it's not going to just instantly rebound and be right back up in 2 days to where it was at the close of the market today, before the report came out. But you still don't want to risk that. You still don't want to take that chance. So you want to give yourself every opportunity to exit the trade as quickly as you can when the market opens tomorrow. And this is just a nice little trick to do it. Cancel the existing order that you have in place right now, to exit the entire four-leg trade, and put in an order just for the put side. And I'll tell you, me personally, I don't feel like I'm being greedy in doing this. 242 was our target exit on the trade. However, as far as this stock is trading to the downside, I am changing my limit order to 246. And I might even change it to 247 or 248, simply because I increase my chances of getting out of the put side by itself by only trying to get out of the put side. And it looks like it's going to drop far enough that you can get out of it for 5-6 cents more than what we're currently targeting, and that would be a fantastic thing. I don't always recommend doing that. That you can overplay your hand and get a little bit greedy and not get a chance to get out of the trade as quickly as you would have otherwise. But this is one of those cases where I think it would be a wise thing to actually increase that limit order a little bit and try to exit for maybe 246, 247. I think even 248 would not be crazy unrealistic. Every penny you are below the maximum possible profit of 250, you also increase your chances of getting out a little bit sooner. So be smart and be somewhat prudent in that. But this is one of those cases where I don't feel like you'd be greedy if you were to get out just, a little bit more than what we originally targeted. So that's where we are at with Texas Instrument. Now, tomorrow, we've got Tesla and we've got Alphabet, Google's parent company, both reporting after the close. And depending on what goes on in aftermarket trading tomorrow, I'm probably going to do something exactly like what I just described with those trades, for Thursday morning's open. So if let's say hypothetically Tesla is way up 25, $30 a share or more in aftermarket trading, then everything I just described on Texas Instrument with the call side of the trade, or excuse me, with the put side of the trade, I would probably do that with the call side of the trade on Tesla. Same thing with Google. If it's way up or if it's way down, whichever side of the trade, whichever half of the trade looks like it has the better chance to be the winning side, I'm going to set up a separate order for that to improve my chances of getting out right at the open on Thursday morning. So that's where we're at with both of those. Okay, a couple other quick things to note. I sent out this morning an adjustment on every one of our collar trades that has options expiring at the end of this week, or in the case of Uber, that had an option that had already expired in terms of a long put. So if you followed those adjustments, every one of our collar trades should now be ready to go through earnings, with the exception of CoreWeave. Sometime within the next day or two, I'm going to make an adjustment to CoreWeave. CoreWeave has pulled back a lot. And as a result of that pullback, this $5 spread we had protecting the put side has not given us near as much protection as would have been ideal. And, we're down $30 a share on stock that we bought just honestly a couple of weeks ago. So that's a bigger drawdown than I usually like to have. The long puts have definitely, or the put spread has definitely protected a portion of that, not nearly as much as what we wanted. That's okay. We can make some adjustments to this that will improve our overall situation. I see this as a very temporary thing. I'm not worried long term about CoreWeave. And I believe they have their earnings coming up in about, I want to say about 2 full weeks from now. Let me take a quick peek. I was looking at it earlier today and now I can't remember. So give me just a second. August 13th. Yeah, about 2.5, almost, I'd say about 3 weeks from now is when they report. So they've had a couple days in a row now where they have moved back to the upside. Not a lot, but it's still, I think, kind of a good sign. At the very least, I think they're kind of setting in that support line right there. That's not a good straight line, but right there where it was previous resistance briefly. I think that's kind of where they're setting in a support line. They're not trending down as sharply below the mid mark on the RSI, and they have not crossed into oversold territory. They did spend a fair amount of time a month and a half ago in overbought territory, but I'm still very bullish long term on CoreWeave. But it's nice that they're kind of slowing down the descent a little bit. Doesn't mean between now and the next few weeks they won't continue to go down. If they break this support level right here, I'm going to call it 125. They've been below that, but I don't think they finished below 125. If they break that support level and close even a single day below 125, we're going to adjust the collar trade and the spread trade we have on CoreWeave. For right now, I'm not quite ready to pull the trigger on adjusting either one, but we'll do it. We'll adjust quickly if either of those, if that happens, if it finishes below 125. Now, last but not least, CrowdStrike. I feel like I called CrowdStrike absolutely unequivocally wrong. Although when you look at how much they move on a given day, and the fact that they held up at 470 today, even though they finished down towards the lowest part of the trading day, I still feel like CrowdStrike in the next couple of days could have a bounce back to the upside, especially with this news about the deal with Japan and how that could potentially bring the entire NASDAQ up tomorrow. Depending on how they start to trade at the beginning of the day, I will not wait past tomorrow to make an adjustment. I do not want to roll it out in time again. If they are not trading kind of strong to the upside tomorrow morning at the open, if they're not fairly strong to the upside, we're going to turn the trade. We're going to switch it from the bull call spread that it is right now. We'll take our short call. We'll roll it straight down so that it's below the long call. We'll turn it into a bear call spread. We'll be kind of careful with our strike prices. We're looking to mitigate the loss, not necessarily turn it into a profitable trade. And then we'll have to monitor it really closely to hope that if we in fact do that, we got to hope that it doesn't jump up real high, the day after we do that. So that's why I don't want to send an adjustment on it tonight for tomorrow morning's open. I want to wait and see how it begins to trade in the morning. So that's where we're at with that one. Everything else we have right now is looking awfully good. Our spread trade overall profits are still fantastic. Oh, one last thing. I'm just going to send an email. I'm not going to put together a specific PDF for it. I am just going to put together an email, but rather than go through earnings season or the earnings report with a bullish directional trade on Amazon, I believe as of today's close, you'll see this fill in when this refreshes. I believe as of the close of the market today, we are over 15% to the profitable side on Amazon. I'm closing my Amazon trade first thing in the morning as long as I can get 15% out of it. I would even, if it's dropping a little bit in the morning, I would even take 13 or 14%. I don't want to add long puts to this trade or a bear put spread to this trade. I've been in it a little bit longer than I initially planned on being in it. And so I think in this case, the smarter thing to do would be to just exit Amazon for approximately a 15% or maybe even just a little bit better than a 15% profit. I'm going to see really quickly if I can maybe get this one. See if I can maybe get this one to update before I wrap this up and can see exactly where we're at. I know earlier today we were for a little while better than 15% on this one. So if that's still the case, I haven't even looked at where it closed today, but if that's still the case, then I think we close it tomorrow morning right at the open of the market. And when I'm done recording this, I'll put together a real quick email. But again, it's not going to have a PDF with it. It will just be an email saying, let's close Amazon and try and get at least a 15% return. There you go. That's about what I saw it at earlier in the day. 15.45%. If I can get out with that 15%, I'm taking it. If we were to change this to say 15%, then that tells you exactly where to set your limit order. So set up a limit order tomorrow morning for 1776. I love that number. Arguably one of my favorite numbers in the whole infinite number of numbers. 1776 as a target exit. And let's close this one and take that profit and be done with it first thing tomorrow morning. All right, I am going to wrap up right there. I apologize that this got out so late in the day. I cannot guarantee that that's not going to happen again once or twice this week. I will try to get this podcast done each day closer to the close of the market. But there were some circumstances today. I'm very fluid this week. I've got to be very flexible with everything going on. All right. Hope you had a great Tuesday. I hope you have an even better Wednesday, everyone. Thanks. Bye-bye.